All right, so I think I left off on week 3. I was getting into week 3 of the swing trading, learning to swing trade with the paper trading account. And I'm on week 4 right now and having some success this week. So I did a couple things differently. Starting to learn a little bit more patience because I was primarily day trading before and now trying to swing trade. So holding overnight was new, and now I have some trades to show you guys that I was holding for up to a week. So I'm actually still holding one, and tomorrow will be day 7 that I'm holding it. So as I said in the last video, I've been trying to take a step back and look at bigger time frames. So I was looking at like 1 minute, 5 minute charts, and now I'm trying to make 1 hour my lowest time frame that I look at. So I'm actually up to the 2 hour time frame. So I'm looking primarily at daily and 2 hour time frame. I might go down to the hour or maybe a little bit lower if the chart is kind of hard to read because it's only showing like 1 or 2 candles. Trying to stay broad view and look at everything big picture. So I'll go over the trading log also, but over the last week and a half, I've almost completely eliminated all of my losses on the long side. So I was having a pretty rough go at the long side, but I was doing well on the short side. So I'm down to $14 in losses on all of my long trades over the previous 2.5 weeks. That's also why this video didn't come out at the end of the last week, is because I was still holding 3 trades through the weekend. So I might start adding some other videos in as filler so I can still keep like a weekly routine. But that's a good sign because it means I'm not trading as often and I'm holding the trades longer, which is the goal. So I also did come up with a plan for how I want to transition into the real account. So I started with $3,000. I decided when I trade the account up to $5,000, then I will transition into the real account using $5,000. So as of today, as of this video, I'm over $4,000 now. So it's about $4,000 and there you can see the account, $4,007, and I'm actually still holding 2 positions right now. So before we get into the trades, I will say I did have a little bit of inspiration for this strategy. And I was listening to the Chat with Traders podcast. If you haven't listened to that podcast, go listen to it. And one of the guys that was on there was talking about buying breakouts and trend following, long-term trend following, stuff like that. I realized that was something that I wanted to try that was different than what I normally do. And it actually worked pretty well. So I'm normally short biased and I'm normally have a contrarian view on things where I want to find reversals. If it's in an uptrend, I'm looking for a short. If it's in a downtrend, I'm looking to buy it. So trying to do the opposite of all the time of what the market is doing, which doesn't really work that well sometimes. So I'm trying to get out of that. I'm trying to buy things more and not be so short biased. So I feel like the last week and a half was pretty good, and I feel like I learned a lot. So let's get into the trades. All right, so you can see here, these are all of my long trades. So I was having a pretty rough go at this. And I think a lot of it is because I was trying to buy when the market was in a downturn. So a lot of the trades I think just weren't working out because they were going against the market, and I'm also not very good at timing long entries. So I think a lot of it has to do with how I'm scanning and how I'm finding things also. So I'm typically scanning for my short bias, so I think that's why I'm having some problems buying long, especially with the market turning down. So I kind of erased all of that stuff and I went for 52-week high breakouts. You can see all of these 52-week high breakouts, and it was a winner on pretty much every single one of them. So pretty excited about that. 52-week high breakouts are something that I would never go after before because I always have the idea in my head that it's up too much and it has to pull back, and I'm always looking for the pullback and trying to catch that. We'll just go over the trades here. So this JBLU, this is like JetBlue Airlines or something like that. So this was a flag breakout. So again, here I'm on the 2 hour chart. And essentially what I saw on this was it was a 52-week high, but it was also flagging here. So saw that and basically tried to catch the breakout. The breakout was right at 19, right at this area. This is 19, and I ended up getting it late. I ended up getting it at 1970, but that was okay. I felt comfortable chasing it a little bit, still using that 19 area as a stop loss, and just kind of let it work itself out. So once it broke out and it held over 19, I felt a little bit more comfortable with it, and I held it through this whole section here and let it pull all the way back. So I used this top and this top as kind of a watch out area for this pullback. If it did break down below this area, I would have stopped out on it, but it did hold this area. It never actually went below this peak here. and then it ended up pulling all the way up to 2173. So I'm still holding 10 shares long on this one right here. So I originally had 60 shares, but I took 50 of them off today, and I'm just going to let the 10 ride. And then what I'm going to do is I'm going to use this 15 moving average to follow this thing. So what I'm going to do then is I'm going to use this 15 EMA as kind of like an exit point. So when this pulls back and it closes on the day below the 15, I will exit. So that's kind of the plan and why I want to hold the 10 shares, because I want to test that and see how well it works for me and try to work on some patience with that one. So this trade overall, I'm still holding these 10 shares short right now. I'm up $20 on that, but the rest of it was about $100 there. So that worked out pretty good. So in my notes here, I put that I missed the 19 entry and it held 1950. So I went in with starter size at 1960. So the reason for my exit, I hit my price target. That was one of the big things. The pre-pandemic high was the price target that I had on here, and it was overbought on the 2-hour chart. So that's kind of why I exited today. It hit my price target that I had here, this 2165 pre-pandemic high. Back on the daily chart, that's right here, this 2165. That's what I was using as a reference point for my exit target. So again, typically I would never look at something like this as a buy, because I'm short bias and I always feel like it should pull back. And so this was just a different style trade for me, and it ended up working out pretty well. So again, on the 2-hour chart here, this is very overbought. So it's in the 82 range, and it has been for quite a bit of time. So it's starting to become overbought and pull back. So I sold it there. So that and the combination with it hitting my target was the reason I pulled most of it off. So lock some profit in, and then I'm going to let the other 10 shares just kind of roll here, and we'll see what happens with that. So the other one here, CDEV, I had an entry at 4.9, and then I exited at 570 and 585. So CDEV here, this was also a 52-week high breakout. So you can see here's the March pandemic pullback here. So this is coming straight up, 52-week high. So it's following this 15 moving average pretty nicely. And it's actually still pulling away from the 50, so that's actually a pretty good uptrend still. So this thing did have a nice pop here on the 52-week high breakout. Then it pulled back from 608 all the way down to about 450. What I ended up doing was waiting for this pullback, waiting for it to pull back and retest the 52-week high and then start to go higher. So right here is about where I entered, and then I just rode it all the way up. So the reason I exited this one is because it was already up 20%. Pretty close to 20%. So I made 15% and 17% on the second half that I took off, or the second quarter, I should say. So I originally took off 150 shares of the 200 at 15%, and then I took off the last 50 at almost 18%. There is an RSI divergence happening on the 2-hour chart. So we're making higher highs right now, and then we're making lower highs on the RSI. So I feel like this is going to start to pull back a little bit. It might only pull back to the moving average or pull back to the 50 EMA, which I would still be up on the trade, but I ended up just wanting to take it off and lock some in. 15%, 17% is pretty good, so I'm happy with that. So next one was EQNR. This one was only $3, like a quarter of a percent. This one was just a really slow mover, and I was holding it for 4 days, and it didn't really do much, so I took it off. But again, here you have the 52-week high breakout. This is making a nice little cup and handle here. So if you see this little cup forming, another double top, takes a higher low, and then breaks out. So it broke out, came back, retested, and then started to pop a little bit higher. But I took it off. I really didn't have any reason besides it was just kind of a slow mover, and I didn't really feel like waiting for it. But this would actually be a pretty nice hold still, I'm sure, because it's following the 15 EMA really nice here. And really no reason to take it off besides it was just moving really slow. So we'll go over CAN first. CAN was a $150 trade, so 10% on this one. So this one was just a 1-day hold. And again, 52-week high, and this is also a crypto equipment company. So Bitcoin is running like crazy right now and making new highs. So I kind of felt like this thing was going to have a decent move once it broke out, especially once it broke out of this channel here. So you have a combination of a channel it's following the moving averages up, and it's also making a 52-week high and breaking this little double top here. So volume came in nice, had a nice break through the high here, and my trade was only like an hour. So I went from 26 to 28. So this right here was like the whole trade that I had. So really small in hindsight on the big picture of the move here. And it does look like it's pulling back and it wants to hold that 15 moving average. So we'll see what that one does. The reason I didn't want to hold this one long term is because it's a Bitcoin stock or a cryptocurrency stock, and with the way crypto and everything is acting right now, I mean, it's definitely something that you could probably wake up the next morning and this thing will be down $12 a share. So just wanted to lock it in intraday. So the last one is one that I'm still holding right now, UAA. This one is Under Armour. Still holding it right now, up $22 or 1.5%. Only holding 60 shares. So again, this one is kind of the same pattern. It's been trading in this channel and it's been following the 50 EMA pretty closely and broke out 52-week high. So it's just now starting its pullback. So if we look at it on like a 30-minute time frame, it broke out. It did have a nice little increase in volume on the breakout, and it's starting to pull back to the 15 moving average right now. So what I'd like to see, or what I'd be comfortable with, is this pulling all the way back to the breakout. So this 2350, if it were to break below 2350 and hold below 2350 and then trade back into the channel, I would take it off. But up until this point, I'd be comfortable with it pulling back all the way to the breakout and then running higher. I just put this one on today. I bought it right at the breakout when it was breaking out. 2380 is my average entry right here. So if we look at where 2380 is, 2380 is right in this range right here. So I bought it just outside of the breakout right after it happened. So again, what I'll be looking for on this one is this to start to move higher, make higher lows, and then follow the moving average lines up. So I'll keep you posted on that one, see how that goes. So overall, it was a pretty good week for me. I felt like I learned a lot about myself and patience and just kind of letting stuff work out. It's interesting to find out also that these are pretty stress-free trades. So there's a pretty specific reason for entry. There's a pretty clear stop loss. So you have very low risk, but great reward on it. So my stop losses on those were like 15, 20 cents, and they never even hit the stop loss. So I was very comfortable with where they could go and taking them off if they did go there. And they all ended up working out pretty well, except for the one that I took off just because it was moving slow. And you can probably see a pattern with me using like 30 shares, 60 shares, depending on price of the stock. So what I've been doing lately is I'm distributing the account size between multiple trades. So instead of using the whole account on one trade or two trades, I've been trying to use around a third of the account and take multiple trades. So there's a couple reasons that I'm doing that. You have a lot smaller swings, and you also have the ability to have more winners than losers on. So right now I'm trading at around a 60% win rate. So if I have 3 trades on, that means statistically 2 of them should be winners and 1 would be a loser. But it also leaves room to rotate through different trades. Like if I'm holding one for a week, I might be holding one for a week and then have one on for a day and then start one 2 days later and kind of rotate through them. So I'm still using the same 1% loss as a target for a stop loss, but kind of distributing it and not putting all the eggs in one basket. Seems like it's working pretty well for me mentally. So the CAN trade, CAN, that one was like $150. I completely forgot about that trade. That was on the 9th I did that trade, and today's the 15th. I completely forgot about it. So I feel like that's a good sign with kind of like being disconnected from the money and the euphoria of having a good trade and a winning trade. If I forgot about that one, that was like one of the best trades that I've had so far while I'm doing this, and I completely forgot about it until my spreadsheet here didn't match my account balance on the paper trading account. And I went back through it and had to figure out why it was off by $150, and then I found that trade in there. So I feel like that's also a good thing for like the psychology part of it, starting to lose that connection with the money and the excitement of winning. So speaking of trading psychology, I'm also reading a book called Trading in the Zone by Mark Douglas. And this is the second time I've read this book now, but I could maybe even do a video just on that, or like the trading psychology part of it, because I feel like the psychology portion and risk management is more important than being good at finding trades. So let me know if you'd be interested in that. Thanks for watching. Have a good one.